Hello, let's start. Yeah, good morning, guys. So basically, today's session, I just wanted to highlight on the recent hot topic, which they have just now released the new Caro 2020. So for your understanding and knowledge, I have put up a folder in HNR data knowledge Caro folder. I have put across Caro 2016, which was the latest Caro before the new Caro came in. I put across this Caro 2020, and based on 2016, there was a guidance note issued by ICI. Even that is put in the same folder. So the idea behind doing these sessions is that it's not that we read all the things and try to make it a small Excel sheet or a Word document and ask you guys to read. That may not help. Always try to read the base documents. So that's why I have put across these base documents here. Now, as you know, any changes in the Companies Act is governed by a gazette order, or whenever a particular amendment gets published in government gazette, it becomes a law. So what actually has got amended for introducing the new Caro is that the order may be called as Companies Audit Report Order 2020. So there is a new insertion of this order into the act, and based on this is what we will be auditing the companies wherever Caro is applicable. Now, the understanding which you guys have is, can you see the screen whatever I have put up in the screen? Can you see this, the Excel sheet?
Yes, sir.
Okay. So this document has been prepared by one of the articles in the office. Everybody mute your mic. Neil. Okay, I can mute you guys better. Okay, so okay, Bala said yes, he can see the Excel sheet. So Hyderabad office can see the Excel sheet. So Snail, can you see the Excel sheet? Yeah, Hubli office, can you see the Excel sheet? Guys, hello. Snail, can you see the Excel sheet? Hello.
Hello, we can
Okay, so just a moment, sorry, 1 minute. Yeah, so as said, the idea is not that refer only this document, but this document, whatever is made up, is made by an article in Hubli office. Her name is Sampada, new article. So what I had asked her is to make a comparison of clause by clause of Caro. So we have a document here wherein you can refer this. Yes, this is the document, but still, whenever you have any doubt, try to refer the guidance note and get into details. So today I'll just give you an overview of what are the changes. Anything in detail, we can go clause by clause later on. So first, most important thing is applicability. We have been discussing on this applicability, and if anybody has questions on the applicability, can unmute and discuss on this. But majorly in the last audit season, we have a lot of confusions with regard to whether it's a small company, private company, and the discussions going on that. So if you read the existing Caro and the new Caro, there is no change in the applicability. Same private company exemptions is provided and all other exemptions are provided. So what does it say is it shall apply to every company, including a foreign company, except the below companies. What it says: banking company first, second is insurance company, third a company licensed to operate under Section 8, that is non-profit organization, NGO company, one-person company and a small company, and then any private company having these exemptions. Now, always we have the confusion between this a small company and whether a private company. Now, these are all or clauses. So it can be either a banking company, it is exempted, insurance company, it is exempted, Section 8 company exempted, one-person company, small company exempted, private company exempted. Now, any of these is not there, then it gets applied. So first, if you want to go through the small company definition, then small company definition is mentioned in Section 2, subsection 85 of Companies Act. Now, Section 2, subsection 85 reads out like this. Small company means a company other than a public company. So all public companies are not small companies. So where paid up capital of which does not exceed 50 lakhs or such higher amount as may be prescribed, and which shall not be more than 10 CR. And turnover of which as per the last immediately preceding financial year does not exceed 2 crore or such higher amount as may be prescribed, which shall not be 100 crores. Now presently it says only paid up capital. There is no reserves here. Please understand. So paid up capital less than 50 lakhs, it comes under the small company definition, and it's an and. Paid up capital 50 lakhs and turnover of which is less than 2 crore. These two conditions, if they satisfy, that's a small company. And this specific section itself does not apply to a holding company, a subsidiary company, a company registered under Section 8, a body corporate. So please understand, if it's a holding company or a subsidiary company, we should not judge whether it's a small company or not. So we had this confusions in the past, considering, for example, BMIS. BMIS is not, sorry, BMIS is not a good example. Consider cipher dot seromorphic, or maybe as such one more company like Mishipe in Hubli office. Now, where we have this particular clause. So for cipher dot seromorphic or any other company which is a subsidiary of a foreign company, this particular clause does not apply, right? So then we need to go back to the section and see, okay, it's not a small company, or this section does not apply. Then it's not a banking company, insurance company, this one. Then go into the private company definition. In that, you see not being a subsidiary or a holding company. When you see it's a private company, when you see it's a private company, you need to see whether all these conditions apply or not. Please understand, this is an and condition. So all of this should be no, then only the exemption will apply. So if you see private company not being a subsidiary or holding of a public company, not having a paid up capital and free reserve not more than 1 CR, not having borrowing more than 1 CR from any bank or financial institution, not having total revenues more than 10 CR. Now, when you judge this particular clause, you have to judge based on the current financials, not based on the previous financials. So when you judge a small company, you go to previous financials. When you judge a private company, when you judge based on this particular clause, it is based on the current financials. So just to remember, it is 110. Paid up capital 1 CR, paid up capital and free reserve 1 CR and above. Then not having borrowings more than 1 CR and above, not having a turnover 1 CR and above. So any of these particular things does exceed the limit, then Caro applies. So most of our companies, because we deal with startups, the issue is they would have raised a share capital of 1 CR, 2 CR. And because we normally treat the first year expenses or second year expenses as capital expenditure, so the expenditure of that 1 CR does not go through the P&L account. So that's why the capital plus free reserves, that is it, which includes security premium account for those startups, normally cross 1 CR. So please be very careful in just judging the company that it's a loss company, so there might not be good reserves, or it's a it does not have any loan, or it does not have any what you call turnover more than 10 CR. That particular clause may apply because of one particular thing, because it's a startup and it has raised more than 1 CR of funding, wherein most of that part is security premium account sitting in the reserves, right? So basically, if you see, I'll just open up one financials to just make you aware that how you can judge. So if you see one of the financials, right? So see, this company is actually in losses. So they are in almost 1.26 year of loss. There is no turnover of more than 10 CR, and there is no loan. There is no long-term borrowing of more than what you call 1 CR. But if you see here, just because of securities premium account, the shareholder funds, which is nothing but paid up capital plus free reserves, has exceeded 1 CR. Now, even though this company is a startup, just because of this particular clause, we end up reporting the Caro, or all the clauses of Caro become applicable to this particular company. So on applicability, if you guys have any questions, just note down. I'll quickly move on to the clauses so that this document is most of self-explanatory. I will only highlight after we discuss on this applicability. All other things are mostly self-explanatory. So I want you guys to go through the document, so that this call is just for information purpose. We want you guys to go and read in depth in each of these sections, so that it will help you for your exams. Second, it will help you to find out where you can find a particular clause, or where you can find a particular guidance note for this, so that whenever a client asks, or we come across a particular applicability of Caro, you should not go back to this Excel sheet or any general article in Tax Guru or Google. Have the base document always ready with you. This can be the base document. Yes, this Excel sheet can be a base document, but because we have mentioned in short forms the clauses, I prefer, once you refer here, go back to the main clause and read. So quickly going to the changes, so that I'll start highlighting the changes which are there in Caro 2016 and revised in Caro 2020. Okay, so moving on to the first one, very important, fixed asset. Few wordings have been changed. First is maintenance of records. It is same. There is a new line item added, wherein company have to see, earlier fixed asset registers never included intangible assets. The format of Companies Act never included that. Intangible asset register was separate. So here it is now asking us whether the company is maintaining proper records and showing full particular of intangible assets. So this is a new addition. I'll just highlight it for your reference in the Caro. Now, physical verification, yes, it is the same. Now, deeds of immobile property, point 1C is same, but there has been a new word, there has been few inclusions of the word. Like for example, the other word earlier Caro read out that title deeds of immobile property are in the name of the company should be disclosed. Title deeds of immobile property with the name of the company should be properly disclosed in financial statements, excluding properties where the company is in lease and lease agreements are duly executed in favor of the lessee. Now here they have mentioned a specific format of default. If you click on this, there is a link to the format of default in disclosure of immovable property. Very, very important where you guys are auditing companies, and in the fixed asset schedule, they have land and buildings because those are the immovable properties. So what is the format of default which MCA want chartered accountants to look at is this: description of the property, gross carrying value held in the name of whether promoter or director or a relative or employee. Period held indicate the range where appropriate. The reason for being held in the name of company, not being held in the name of company. Also include if in dispute, right? So always understand if the properties are in the name of directors, relatives, but they have been shown in the name of in the books of the company and the title deeds have not been changed. So this specific clause has been put across. Now there might be few detailed discussions coming up for this particular clause because many companies come under this particular category, because there might be companies who might have converted from partnership to private limited. So the name of the partnership might be still appearing the land records. So there might be a few lands which have been assigned or given permanently to the company by the directors. Few still in few records or few municipality records might be still showing that the land belongs to the director. So all these are very important. If such things come up, they come up in the default. Hit. Just a moment. Okay. Next is specifically revaluation of the assets. Next is specifically the revaluation of assets. New line item added in 2020. Then proper disclosure of Benami property held by the company and proceedings initiated on pending against the same. So these are the again two new line items added for the fixed asset category of Caro. Moving on to inventory, physical verification of inventory at proper interval and material discrepancies, if any. This was one of the points in inventory. Now, this is a very, very, very important point and an extra work for chartered accountants which has been added in the new Caro. I'll just read out this point. Please listen carefully. So the point A is same. There is no change. Point B talks about, this is very much applicable to most of the big company audits which you do, where you have loans or CC limits. So the clause reads out like this: whether during any point of the time of the year the company has been sanctioned working capital limits in excess of 5 crore rupees in aggregate from banks or financial institutions on the basis of securities of current assets, whether quarterly returns or statements filed by the company with such banks or financial institutions are in agreement with the books of the company, if not, give details. Very, very important. See, we know that quarterly statements get signed by us, by chartered accountant, and then we submit to the bank. Like most of the SKR clients where we have loans, we, like Suresh sir certifies the stock statements and submit. Or sometime what happens, some other chartered accountant would have certified those stock statements and submitted to the bank, because quarterly submission of stock statements, audited stock statements, is mandatory in most of the working capital limits. Now, in this case, what is the Caro asking us is, whatever intervals quarterly returns or statements filed by the company with such banks or financial institutions are in agreement with the books of accounts, if not, give details. See, presently we were only auditing balance sheets as on 31st of particular financial year, 31st of March particular financial year. This particular clause actually extends the scope of audit, wherein quarterly financials, at least quarterly current assets and inventory figures which have been submitted to the bank have to be seen based on the tally backup which we are auditing. So that this point has been there is no detailed guidance note or a working which has come up for this, So this particular clause will involve most of the discussions in future. So this is something which you need to be very, very particular about. What the department is now expecting is many companies, just because to keep their working capital limits active or keep their working capital limits on a higher side, submit stock statements wherein the stock figures are different from that of the books, and try to get it certified by some other chartered accountant provide. So when it comes to the final audited numbers, yes, there might be up and down in the final audited numbers which we audit and submit. But now the responsibility has been put on the statutory auditor's head, that statutory auditor is very, very statutory auditor should verify that whatever quarterly statements have been submitted by the client during the year, whether they are agreement with the books of accounts or not, which we are auditing. There is no particular schedule to give the details. So again, guidance note might come up with giving us any table or something to provide the details. Now, this particular section of loans, we will take this up very separately, because this particular loans and advances needs a detailed understanding of section 185 and 186. So we will take up the loan clauses separately, but please understand there have been new clauses also added. Here, the new clauses read out as aggregate amount during the year and balance outstanding at the balance sheet. So these actually points were there in earlier Caro. Now in the new Caro, it was only with regard to grant of loans and all, but again these points have been newly added in the Gazette. So as I said, we will take up the loan and section 185, 186 separately. Maybe we will have a separate session on understanding of 185, 186. In that session, we will also come across how to audit if such loans are there on the basis of Caro. Then moving on to point number 5, deposits. Most of the clients, because we don't deal with public companies, we don't come across actually deposits in companies, but always understand DPT 3, which is an annual filing. It is a very, very important document, because last year when we filed it for the first time, it had asked for audited numbers, and the deadline for DPT 3 is June 30th. Now, June 30th, giving an audited number for deposits normally is not possible. So, thing is, we may have to be very particular. At least the deposit amounts which get submitted in DPT 3, those numbers should reconcile with the final audited numbers. So on that particular point, yes, this is a deposit point, but this deposit is specifically applicable to public companies. Maintenance of cost record, it's the same. To be frank, I have not come across with cost records maintenance for any of our clients. But again, with regard to any specific client, when this is applicable, we will make up a separate session for a particular this point, maybe a small session or a small video understanding for this particular point. Now, statutory dues, the point has not been changed. It's the same, wherein the company has to record more than 6 months defaults, regular deposit of undisputed statutory dues to be appropriate authorities, if not the extent of arrears outstanding dues as on the last day of the financial year. Now, there is no change in this point. There is a new point added, point number 8, underrecorded transactions. Any transactions not recorded in the books of accounts and are disclosed in the income tax assessments, then are those unrecorded transactions recorded during the year. Now, many a times the income tax adjustments just gets done as a tax line item as previous year taxes or previous year refunds. Now, the specific requirement which has come up in Caro is there. I will read out the point again. Any transactions not recorded in books of accounts and are disclosed as income in the income tax assessments, then are those unrecorded transactions recorded during the year. So, undisclosed incomes during the assessments have to be disclosed as income, and such thing have to be reported here. Now, again, clarity on how do we need to report such transactions, how we need to put it in a table is not been put here. A guidance note may follow with that proper table. Next, loan taken by company. Yes, again, on this, there has been very different, all these are the 4 different points added. Whether the company is declared willful defaulter by the bank, whether the term loan were applied for purpose, which see whether term loans were applied for the purpose which it is used, whether funds raised on short term has been utilized for long term purposes. Actually, these were there earlier in the points, but these sections and the different points have been added across for the loans taken to the company. Now, again on loans, particularly when we say loans and advances, and section 185, 186 will take up this point. There is earlier there was a point on IPO, even that is put across, but yes, there is a separate point on merger of 2 points, change of words has been mentioned. Whether company has made any preferential allotment or a private placement or convertible debenture. If so, as to whether the requirement of 42 and 62 has been complied with and the amount raised has been used for the purpose for which the funds have been raised. All the companies where we actually raise funds, they have to report this particular points, wherein we need to just say that yes, the company has raised capital, or if the company has not raised capital, we need to say no, the company has not raised capital. There is no requirement of mentioning the funds amounts here, but we need to say, talk about whether the compliance has been followed or not while doing the allotment. Now, fraud point, there are 2 new line items added. Very important. Whether any report under subsection 12 of 143 has been filed by the auditor for ADT3, whether company has any whistleblower complaints, if any, received during the year consideration for the same. Now, one more point, managerial remuneration with this has been removed, ceased to exist in Caro 2020. Nidhi company, not applicable to most of our clients, but yes, there is just a split of point and a new line item added. Related party transactions, they are same, whether all transactions with related parties are in compliance with section 177 and 188 of the Companies Act, whether applicable and where applicable, and details have been disclosed in the financial statements, etc., as required by applicable accounting standard. It's the same as before. Yes, specifically when you are doing, normally we do related parties as a disclosure in all the financial statements, but here we need to certify that all transactions have been disclosed. So this is also very important point which was earlier there. Now, internal audit, new point added. Presently, internal audit is mandatory only for unlisted public companies and for private companies where the turnover is more than 200 CR. So right now, most of the companies where 200 CR and above turnover is mandatory, there they have to appoint a independent chartered accountant as an internal auditor. We need to just check in which of our clients this is applicable and see whether internal audit system, internal audit system, not internal control system, internal audit system is commensurate with the size of the business. And this particular section in Companies Act talks that about 200 crore turnover companies, internal audit is applicable. Non-cash transaction with director, same as previous Caro. Registration of net owned fund, this is with related to more of NBFCs. Now, very, very important, from 17 to 21 points, all these points are new points added in Caro. One is amount of cash losses, whether company has incurred any cash losses in financial year and immediately preceding financial, if so, state the amount of cash losses. Then statutory auditor, very, very important, whether there has been any resignation of any statutory auditor during the year. If so, whether the auditor has taken into consideration the issues, objections, and concerns raised by the outgoing auditor. See, it is very easy for us to write that there has been no concerns or objections. But most important point which many of us miss is we don't document how we have come to that conclusion. Whether there has been a communication with the statutory auditor, previous statutory auditor, whether we have taken NOC in writing, whether we have specifically asked them whether were there any objections and concerns raised, and referring to the previous audit report if there are any specific qualifications. It might be a simple one-pager document, but very, very important for us to understand that um, that whether this has been documented or not, because just by writing here or having one email trail may not help us. We should have a document wherein we put those questions to them and they answer yes or no to those questions. So again, a guidance note may come up with a specific format in which we need to now take up NOC. Earlier NOCs were very one-liner, saying that we don't have any objection for you to accept the audit assignment. Now we need to have a detailed NOC where they need to say that there are no issues, no objections, and no concerns. Something like this should be worded in the NOCs. This 19th point is very crucial again. They want us to now get into the as a role of a banker in this particular point. I'll just read out the point. Hello. The power. Can you guys hear me? Hello. Saurabh? Yeah, can you guys hear me now?
Yes, sir.
Okay. Share. Okay. I'll just repeat the point again. I was in this point, finance point. Very important again. The MCA and even an institute wants chartered accountants to be very particular on the financing matters. Many chartered accountants who are now or most of the chartered accountants who are in the business of providing finances or getting loans to the companies, this point we need to read out, or this point has to be specifically followed while doing the Caro assessment. On the basis of the financial ratios aging and expected dates of realization of fixed assets and payment of financial liabilities, other information accompanying the financial statements, auditor's knowledge of BOD and management plans, whether auditor is of the opinion that no material uncertainty and company is capable of meeting its liabilities. Now, in this whole point, if I just try to show this point in um, yeah. So this is the point actually, which was in shortened there. On the basis of the financial ratios, aging and unexpected dates of realization of the financial assets and payment of financial liabilities, other information accompanying the financial statements, the auditor's knowledge of board of directors and management plans, whether, whether the auditor is of the opinion that no material uncertainty exists as on the date of audit report, that company is capable of meeting its liabilities existing at the balance sheet date as and when they fall due within period of 1 year from the balance sheet date. So very, very important to understand how we need to actually assess this. See, as long as the point is not in Caro, but still auditors normally take a comfort whether the company is able to pay the loans or not. But when this point has specifically come up in Caro, it is very important for us to now understand how we will document it. How we will document in the sense whether we had discussions with the management, whether management has 1 year future projections done for understanding how much profit they will make, how much liabilities they can pay off. Now in this, they are talking about expected date of realization of financial assets and payment of financial liabilities. Now it is not only the banking liabilities, it relates to all financial assets and financial liabilities. And what is that we need to give opinion on is opinion that no material uncertainty exists as on the date of audit report, that the company is capable of meeting its liabilities existing at the date of balance sheet as and when they fall due within 1 year of balance sheet. Now there is one financial statements, if possible I can try to show you guys, wherein I'll share that financial statement with you. Turnover was 4 CR, debtor was 1.5 CR, and payable balance of accounts payable, trade payable balances was 2.5 CR. So when you have a receivable of 1.5 CR, bank balance is only 10 lakhs, turnover is 4 crore. How will the company end up paying? Right? Because financial assets and financial liabilities, now no doubt company has a very good land and a building sitting in the uh, balance sheet, but fixed assets right now cannot be liquidated to pay off the trade payables. Now such a balance sheet, once I share with you the balance sheet, you can understand in such a balance sheet it becomes very difficult for the auditor to document that yes, the company is presently in a level to meet their liabilities. Now there is no the current, to be frank, the current ratio is negative. They don't have sufficient current assets to meet their current liabilities. So in such case, how we should report, what needs to be done for this particular point is a matter of discussion. And again, we expect institute, when it comes out with the guidance note, they have a detailed understanding of this particular point and what chartered accountant should do. Yeah, now we have unspent amount, whether the company has transferred unspent amount to any fund specified in so and so within 6 months of expiry of financial year. This is, I guess, based on unspent amount on dividend. I'm not that clear on this particular clause. They have a section mentioned here. Whether any amount of remaining unspent under subsection 5 of 135 of Companies Act pursuant to any ongoing project has been transferred to special account in compliance with the provisions of subsection 6 and of section 135. Any idea about 135 section? Like we are almost reaching the end of Caro, so we can start the discussion if any questions are there. But any idea on section 135? I'm just seeing MMJC app once.
CSR.
CSR. Okay. So unspent amount has to be transferred to a special account in compliance with provisions of so and so. So wherever CSR applicability is there, this particular point has been added. And adverse report of Caro, whether there has been any qualifications or adverse remarks by respective auditors in Caro reports of the companies included in consolidated financial statements. If yes, indicate details of the companies and the para numbers of Caro reporting. So this is applicable where you are actually doing a consolidation of financial statements and auditing of consolidated financial statements. Consider there are 4 or 5 companies in that consolidated financial statements, and each of them or one of them has been applicable. One of those reports are applicable for Caro, and the auditor of those subsidiary or associate companies has had to give an adverse report. Then your Caro report should include those adverse comments that so and so company, which is part of consolidated financial statements, has given an adverse report. So total number of points now in Caro, new Caro is 21. Now, one thing which we need to understand is because this report has this applicability of this report, there is no specific mention. So this starts its applicability right from the this financial year itself, because they have released this particular Caro before the end of the financial year. So I guess this year, that is 1920, when we will be doing the audit of companies, we should follow the new Caro report only. Now, okay, yeah, every company made by the auditor under subsection 143 on the accounts of every company audited by him to which this order applies for the financial year commencing on or after 1st April 2019. So this is made clear that this is applicable for 1920 financial year. So again, to repeat, I have put the Caro folder with the Excel sheet, with the guidance note, with Caro 2016, with Caro 2020 for academic purpose and also for practice purpose, please go through the order. Please go through the guidance note. Wherever points have not changed, you can still refer the guidance note. Wherever new points have been added, the guidance note might come up very soon. Considering the new points, if you understand, if you guys have started audit or will be starting audit in the month of March of few companies with related to at least these financial assets, financial ratios, or with regard to land and buildings, where we need to report that yes, land is owned by the company. In all those points, you have to extend your audit exercise and try to bring those points into the audit consideration also. Now, this being our first session on such topics, I just want to also point out that a few days back I had put one particular document in the group with regard to audit of small entities. I guess that document might be up. So audit, there is a document which has been released by ICI, which talks about audit of small and medium scale enterprises. That particular document has a very good what do you call work papers, right from what permanent file you need to keep, what particular documentation with regard to each of the items, like fixed asset, current or sales, purchases, everything. Now that particular document, we will try to put an Excel format around it, and each and every client, at least the private limited companies specifically, let's start building the permanent file, have their MOA, AOA, and other things at one place. So it will not be an issue for us in future, because soon the few of our clients will come under, or our firm will come under peer review, wherein it should be very smooth exercise for us. Whenever a peer review happens, we need to just show the documentation and get through the peer review, or maybe any assessment, whatever is possible. Now, yesterday, Saurav Gupta actually had shared one document in secretarial, I guess. Yeah. This is for technical expertise, NFRA, National Financial Reporting Authority, where they have called up partnership firms and chartered accountant firms as interested firms. 1 minute. Empanelment of firms as technical reviewers. Now, NFRA, what they will do with this particular team of chartered accountants, or who they will empanel and what they will try to do, we don't know. So NFRA may start audits like peer review only. They may give assignment of some 10-20 companies to a particular CA firm and ask that CA firm whether the documentation has been done or not. So we really don't know what department or NFRA is trying to do with this particular empanelment. So just a baseline for all the discussion what we are doing, try to document whatever is required to the point. Just generally don't document things that we have a reconciliation, we have a work paper, but try to document to the point. This year we have close to 100 plus companies, private limited companies, for audit. So we will soon design a mechanism to start the audit process. So we need your contribution also. I didn't get that document in the WhatsApp channel. I'll quickly share that document to you again, so that you can start taking the work papers from that particular document. So that's all for today. And please let's share or discuss any questions or anything related to such sessions which we want to do. Over to you guys.
ऑडियो विजिबल है, ऑडियो है, अपन बात करें तो जाता है मतलब।
हाँ, कल सुनाई दे रहा
है। Vinayak, it was a very nice presentation from you regarding this Caro 2020. I have heard the entire thing regarding this thing. I only just wanted to share my views regarding this Caro 2020 and the auditor's responsibility for it.
Yes, uncle.
Okay, earlier, whatever audit we were undertaking, it was only restricted to the Companies Act. Okay, now the Caro is also in tune with banking requirements and income tax requirements also.
Yes.
Because 2 or 3 points, if you see, the certification of the stock statement by a chartered accountant and the differences on a quarterly basis, right?
Yes, sir.
Usually what happens, almost all the bank's assets have gone bad on account of wrong certification of the stock statement, and the bank also, in order to give the drawing power to the client, is not much concerned about it.
Correct.
Now, when we are certifying this stock statement, and because almost for 4 or 5 of my clients, the certification is on a quarterly basis for all the clients, wherein the exposure is more than 5 crore rupees, we have to certify the debtors and stock, right?
Yes.
So now we cannot just casually certify whatever he is getting to us, and we need to also take the correct stock statement by visiting to the clients.
Right.
So I think Caro actually has cast most of the responsibilities of the bankers' requirements as well as the income tax requirements on the chartered accountant, and now we can not take the certification of the stock very lightly, because otherwise we will be unnecessarily hard up. Now, in a few of the cases, if you see for the profit adjustment, every year what we do, we bring down the stock level. Supposing some profit is more, not to pay high taxes, whenever we have given a stock statement certified to the bank as of 31st of March, there will be a lot of difference in so far as the stock statement given to the bank and the audited balance sheet.
Right.
This is a very important thing which we need to take care now, because unnecessarily we are the certifying authorities for both the statements, both the balance, and we cannot expect any difference. So everyone has to be very careful when we are certifying the stock statement as on 31st March. It has to be in tune with the balance sheet figure of stock.
Right.
Right? A very important one is stock statement. Second thing I was going to it, unrecorded transactions in the Income Tax Act. There was an unrecorded transaction, right?
Yes.
So usually I feel what this unrecorded transaction is, whenever a search and a survey takes place in the case of an SSE, there is always an undisclosed income which he declares it under the raid.
Right.
So I think now the auditor has to also certify the amount of one that is an undisclosed income, and you have to get it in the books of accounts. Then you have to account that income, whether it is cash or assets, in the books of the accounts of the company for payment of taxes. So I think this is a requirement of the Income Tax Act actually, which they have brought it into Caro, and the auditor also needs to go through this section 68, 69, or whether any survey or search has taken place, and whether he is recording the transactions in the books of accounts which was not previously recorded. Because
Right.
if I remember, in Premier Hospital there was a search actually, and we had disclosed a cash of around 1 crore rupees. So that 1 crore rupees invariably, if we have declared and paid the taxes, that amount needs to be brought into the books of accounts.
Right.
So we had to debit the cash account and credit income from undisclosed sources, and then bring it to the profit and loss account, and ultimately pay tax and transfer it to this account. So such transactions actually, when we are bringing in the books of accounts and we are paying the taxes, we also need to take care that when we are preparing the computation of income, this amount needs to be deleted, profit as per P&L account minus income already disclosed on which tax has been paid, and the balance only is subject to taxation.
Right.
Right. Third thing, what I wanted to with all these people's this thing. Now, before we start an audit, actually, whatever we are doing it in a proper way, but that is not the proper way of doing things. Let us say we start the audit of one company. Let us prepare a template first of all, whether applicability of Caro or not. On the left hand side, we can put up the conditions, and on the right hand side, we can put up an answer. Supposing in case we are giving a work to an article to undertake an audit, let there be an Excel sheet on the left hand side, requirements actually, whether it is Caro is applicable or not, and someone has to tick on the right side actually whether it is applicable or not. When once that working sheet is done, that if it is not applicable, we keep that as a working paper with us. And apart from that, when the final report is going to come place, all these 21 points actually, we need to put a table on the left hand side, and on the right hand side, we need to keep the remarks totally. This will become a document for us. He needs to address all these 21 points whether it is applicable or not applicable, or if supposing some quantification is there, he has to also put the quantification there.
Right.
That will help us in preparing the audit report when we are finally printing the audit report.
Correct, uncle.
Because right now we have not been doing that thing. What we are doing is, frankly speaking, audit report previous year लो, date change करो, 2018 का 19 डालो, मारो, print out करो, डाल दो. Nobody is going through. Frankly speaking, nobody is going through it actually. They are just doing a cut copy paste job, including me. And for us, audit report has become a very, very casual document for us. Frankly speaking, that is the problem. As far as this thing is concerned, we are very, very casual in our approach towards giving the audit report. Just copy, cut copy. Last year ka cut copy karo, bhai, paste karo, year change karo, find and replace, kaam khatam.
Correct.
That thing we have to avoid in this year. It will not be applicable. All the working papers for an audit of a company, whether it is small or big, it has Maria or someone will devise something, and only that will become a working paper. And when it is coming for the final signature part, actually, all the things needs to be addressed, and only if it is in order, let us sign the audit report. Otherwise, we will not sign the financials, not the audit report. And the practice of filing the income tax return and signing the balance sheet, and after that notice, director's report, auditor's report getting prepared, that has to be stopped in totality. It cannot continue like that for years together. We only understand when the ROC dates are approaching that we prepare the audit report and we prepare the financials and that thing, and so piecemeal thing will not happen in future. And if the balance sheet, and one more thing, no late filing of any returns or documents held for financial year 1920, whether it is anything for that matter, no late filing fee, no document should be going with this thing. Let us adhere to that program now. There cannot be any late filing, whether it is an ROC or whether it is for an income tax. And now when everything is coming up to September, from April to September, let us work very, very hard for all the things. Supposing someone wants any leave or anything for that matter, let us schedule it from October to any time till March. This audit period, as you say, you are having 100 companies of audits, private, so 100 private companies audited.
Yes, uncle.
HNR और SCAM मिला के 100 तो हो गए?
हाँ, आराम से मिला के तो 100% हो रहा है.
So 300 individual, 240 individual returns of mine and 40 tax audits, right? And that is of SKR, and apart from that HNR. So we have a very tight season. Let us start it right probably from beginning itself rather than end up in last. April to September full load काम करेंगे, और जरूरत पड़े किसको भी छुट्टी चाहिए तो सितंबर के अक्टूबर के बाद में शेड्यूल काम, because a lot of work is there. And articles तो यहाँ पे हैदराबाद के जो है ना last year first year अच्छा किए थे, and this year we will further get up ourselves and do it in a systematic way rather than doing it in piecemeal basis every year. And ये क्या होता अभी everything is now September. Income tax scrutiny's deadline is now September for 31/3/2018. So we have a lot of work on hand from April to September. Let us plan it properly and do it out. And cash losses, what you are telling in this Caro, it was there, I think, in earlier Caro, not 2016, maybe in 2013 or prior to it also, an auditor had to report upon the cash losses. Now this is also taken. And one more disclosure which you are telling in Caro, that is regarding whether the company will be able to meet its long-term obligations in the next 1 year. Right? This is also a banking requirement, because if you see the current ratio of any company, if the current ratio is somewhere around 1.33:1, usually the company, because in this it is telling that you have to also analyze the financial ratios. If the ratios are analyzed, current assets divided by current liabilities, if it is 1.33:1, usually in accordance with banking requirement, the company will be able to meet its obligation for the discharge of the financial liabilities as such. So this is an important point, and a little preparation of the proposal and bank knowledge, if we have proposals, that will help us in giving that opinion on that Caro point.
Right.
And because this ratio and other things, when we do bank audit, actually there is an asset liability ALM which we need to report, because even banks also have this clause under this Banking Regulation Act, whether the bank think a bank is having that much of funds to discharge its liabilities or not. Usually that is called, when we used to audit, it was called as bucket system. Because whenever bank has to give some maturity of the deposits used to be there. Huh? So whether the bank has the necessary advances receivable against which it will be able to discharge its deposits liability. So more of this Caro 2020, what I feel, some of the requirements of the banking industry and some of the requirements of the income tax department, right? And some of the requirements of the ICA regarding removal and appointing a new auditor.
Correct.
These things are basically the addition as far as the thing, and 185 and 186 section actually. Someone has to be thorough about that subject and take a class for 1 hour as to what is 185, 186, to whom can a company give a loan, because it will take almost 2 to 3 hours for us to discuss about 185 and 186. So one has to prepare very well and then only discuss about 185 and 186, because we are not ourselves sure as to whether what is quantum of 185 or 186, or whether a company can give a loan to a director, shareholder, or what is the total amount which can be given. That needs to be totally, because 185, 186 violations अपनी कंपनियों में है, मेरे कंपनियों में तो है, मेरे को मालूम.
Right.
So
Correct.
we need to be thorough about 185 and 186. This is what I thought. I will share it with everyone. So audit start करने से पहले someone devise some, anyone can take, that is not a big deal. Whether अपने लिए क्या क्या applicable है, Caro 2020 applicable है कि नहीं, working papers बनाने के बाद में then we proceed with the audit. And after completion of the audit, left hand side all the 21 columns, right hand side whether applicable, not applicable, not applicable or not applicable, because in the end we can say that the clauses number so and so are not applicable for the company under review. Let us say company doesn't have any inventory or any other thing, there is nothing for us to report. If the company does not have any fixed assets, there is nothing for us to report. So in the final sheet we can write up the following clauses of Caro are not applicable for the company during the year under audit. Supposing some company has not taken any loan or anything from that matter, we can say that the company doesn't have, so that banking regulation everything will not be applicable. So एक clause के अंदर left hand side में all the points, एक में applicability, third में remarks, what is the quantum which we need to do. This if we can make out a working sheet, na, it will be very easy for all of us to undertake the audit and keep the working papers with us. So when it is coming for the final signatures, na, the person whoever is signing can go through the tally data or any other thing and he can tick and then he will be accountable for it. A systematic way of doing things, let us start it out.
Sure.
That's all I wanted to say, Vinayak.
Yes, Uncle. Uncle, some light on this particular point. I guess your clients may have this, why this particular point has been included. Title deeds of immovable property are in the name of company, should be properly disclosed in the financial statements, and format of default. So normally you come across case where title deeds are not in the name of company, Uncle.
You see, the question is what happens. Supposing some company is in the construction line of business, okay?
Right.
Let us say I have a land actually, and I want to register that land in name of the company. So under the Transfer of Property Act, I have to execute a sale deed to the company.
Right.
Only when I execute a company becomes the owner of the property. Right? So what I will do is, instead of doing that thing, I will give an agreement of sale to the company. An agreement of sale, if I give it, actually, let us say the value of the land is around 5 crore rupees, and I undertake to cut that and sell into plots. So on 5 crore rupees, I can avoid paying stamp duty of 30 lakh rupees. Right? But what I will do, I will enter into an agreement of sale and give it agreement of sale come general power of attorney, I will give. So when I give an agreement of sale come general power of attorney, the company becomes the owner of the property by virtue of the agreement of sale come general power of attorney. But the land is not registered in the name of the company under the Transfer of Property Act. And what the company will do, it will pay the consideration to me. Let us say I am selling that land for 5 crore rupees. The company will record it as 5 crore rupees, cut it to plots and sell it out. In that case, the land will not be in the company, though it will be having a title to the property. If there is no title to the property, it is only an agreement of sale come general power of attorney. Okay, that is also one of the recognized modes for transfer of property. And then in such cases, we need to report that the property is not in the name of the company, and the reasons also we have to state. That is that where we can say that the company is having an agreement come general power, registered agreement of sale come general power of attorney. That is as good as a sale deed. So I think we have to report clauses like that in that schedule.
Okay, sure, uncle.
So, but one thing is that all immovable property. See, question is immovable properties means whether it could be a current asset or a fixed asset. Number one, right? Insofar as the current asset is concerned, also it is an immovable property. So even that immovable property also we need to do. Let us say NK leasing and constructions is there. We are having many types of lands, but those lands are not classified under the fixed assets by the company.
Right.
They are being shown as a current assets actually because every project is this thing. But फिर भी वो जो है ना अपने को बताना पड़ेगा because immovable property it does not stated whether it is a fixed asset or a current asset.
Right.
So we need to give that thing. And we need to also see the sale deeds of the all the immovable properties that are reflected in the balance sheet.
Right. Sure, uncle. Uncle, just
Caro 2020. Huh?
yeah, क्या uncle?
Caro 2020 को करने के लिए थोड़ी जो है ना बैंकिंग की नॉलेज, राइट, नंबर वन, एंड अनरिकॉर्डेड ट्रांजैक्शंस. यूजुअली अनरिकॉर्डेड ट्रांजैक्शंस अपने केसेस के अंदर जो है वेरी फ्यू केसेस विल बी देयर अनरिकॉर्डेड ट्रांजैक्शंस, यू नो.
Right. No, presently what we are doing, uncle, I guess मान लीजिए इस साल सर्च होके वो असेसमेंट कंप्लीट हुआ है, ब्लॉक असेसमेंट पूरा, एंड इस साल हम 1 करोड़ के ऊपर 30 लाख टैक्स पे की है. So that 30 lakhs cash outflow रहता है, we just put it as earlier year taxes and close, right? अभी के लिए वो. So आप जैसे बोले वो 1 करोड़ का इनकम दिखाना, वो 1 करोड़ का कैश दिखाना और उतना कैश बैलेंस रख के बैलेंस शीट क्लोज करे, तो that is what the new Caro wants.
Correct. See, even in there was an income disclosure scheme in 2016, right?
Right.
And the Income Tax Act.
Right.
In that NK leasing, we declared a 2 crore rupees as cash actually.
Right.
Right. On the 2 crore rupees tax payable was around 45% at that time because there had a 30% tax or 15% this thing.
Right.
So that cash we had to bring it in the books of accounts at that particular point of time. So what we had done, cash account को debit करके undisclosed income under IDS 2016 करके profit and loss account के अंदर credit कर लिए थे. अभी लकी क्या हुआ, वही टाइम के ऊपर डिमोनेटाइजेशन आ गया. तो हम जितने भी पुराने नोट थे सब वो कैश जो है ना बैंक में जाके डिपॉजिट कर दिए पूरे के पूरे.
Nice.
So by paying 45%, we got the demonetized money also monetized.
Great.
And one more thing I just wanted to share it today. इकोनॉमिक टाइम्स के अंदर पेपर में आया है ये विवाद से विश्वास स्कीम जो आया इनकम टैक्स का, राइट. ये डिमोनेटाइजेशन के पीरियड के जो भी कैश के डिस्क्लोजर से और स्क्रूटनी के अंदर जिनका एडिशन हुआ है, I think the government is also giving them that you also come openly under the scheme and pay the taxes and get rid of it. No interest and penalty will be levied.
Correct.
So you will just think कि कोई भी clients रहे तो you can opt. See, we missed the bus in that what you call अभी किसका था scheme, सबका विश्वास dispute resolution scheme was there ना, SBLTRS.
Yes.
Right. We could not take opportunity of that scheme actually because we were not prepared for it. Otherwise, it was one of the best schemes as far as the service tax or settlements were concerned. You know.
Correct.
अपन उतना क्या clients भी नहीं थे, मगर एक चीज है यदि अपने को जो है in case we would have been aware of that scheme and other things, it was a very good scheme. And now this also dispute resolution scheme of Vivad Se Vishwas scheme is also very good. Pending litigations with the department, where I think 31st January 2020 में you should have filed the appeal. But अभी now people are saying कि 31st January 2000 because 31 assessment year 17-18 के income tax के scrutiny assessments अभी 31st December 2019 को हुए.
Right.
The due date for filing of the appeal was 31st January.
Correct.
Many people must have not filed the appeal for whatever reason it is there.
Right.
So they are telling because ट्रिब्यूनल में अपील फाइल करने का 60 डेज का टाइम है समझो. कमिश्नर का ऑर्डर आपको 31 दिसंबर 2019 में आया तो आपको जो है ना फरवरी 2020 तक फाइल करने का टाइम था.
Right.
So we should be also covered बोल के बोल रहे हैं. तो I think ये भी एक अच्छा स्कीम है. No litigations, nothing to do. सेटल ऐसा कोई केसेस है क्लाइंट्स वगैरह तो यू कैन सजेस्ट देम कि भाई काय को तुम जो है ना लिटिगेशन के अंदर जा रहा है अननेसेसरली इंटरेस्ट एंड पेनल्टीज एंड अदर थिंग्स विल हैपन. Kindly come under a scheme, pay off the thing and get rid of it.
Right.
अच्छा स्कीम है. We should also एक दिन जो है ना half an hour or 45 minutes or 1 hour you someone take a class on this Vivad se Vishwas scheme. It's a simple scheme, not a difficult one.
Sure. Actually, March 3rd को एक KPMG का webinar है अंकल. अगर if we attend that and post that specific to our clients, अगर कुछ discussion करना चाहेंगे तो we can do. March 3rd को है KPMG webinar.
Yes.
And this being the first session, uncle, मतलब first session assessment procedure आपने लिया था. And on Saturday basis, if this being the first session, just wanted to say that based on this session, 2 other topics which have come out is work paper on Caro and a work paper on small company audit. Now, because we have been voluntarily asking people to take up the sessions and all, I guess that voluntary thing nobody is taking up. So I have just divided the present articles and chart accountants with us into for 2 specific works. Now we have Maria, Bhargavi, Mani and Shivtej for working on work paper on Caro. Snehal, Suresh, Bala, Vishnu, Sampada being in Hubli so that Snehal can work. So that's why I put Sampada here. So on work paper on small company audit. Now you can shuffle, reshuffle, whatever based on your convenience. I have put across this. If I missed anyone, let me know. Get added to the team. Take 2 weeks of time to prepare this so that we have what I guess because we have already discussed on Caro, work paper on Caro, and considering Maria, you had worked on this in KPMG, right?
Yes.
So a bit of updations because see, when I worked in KPMG, that time Caro 2016 was not there. So you might have a latest Caro 2016 work paper. Based on that updations, if you can work with the team, this you can take a week's time, 1 week time, and next Saturday maybe you can just share the document. If we want to have a session on that, we can have on that, or we can, if while doing that, if you want to take this load, let me know. 185, 186. And considering small company audit will take some time to understand the list of clients, list of audits we have, to categorize them, category A, category B, category C. So let's take this 2 weeks time, wherein the next Saturday, second Saturday, normally it's a holiday, but we'll see if either Friday or Monday, we'll try to have that particular session on the next, actually today is 29th. So we are, this 14th is what we are looking at in completion of this. I know first weeks, because first weeks are bit hectic. That's why I've given some extra time. And considering Maria may have a bit ready work paper, that's why I've given 1 week time. If any changes to this, please let me know. But right now, this is what is expected for the next 2 weeks. Please keep adding your topics. Please keep adding your interests in giving sessions. We can organize, it's not only Saturday, any half an hour topic, half an hour session. We'll try to restrict all the sessions to half an hour so that it is convenient for everybody to listen to it and grasp, and try to put all the base documents in knowledge folder whenever you are trying to do, so that in future references it comes up. So uncle, this looks good, or anything to be added to this, uncle and Saurabh? Because if we say them, you come up with a topic. Sorry, Saurabh is in meeting. Okay, no worries. So you guys just keep a note of this, and let's see. We will be anyhow there, then seeing the progress, what to be done and all. So we can discuss on this and close first. Then Snail, we can discuss on this and get this started. And I would say the document, this is a very nice document in making this small work papers. We can take help of Maria also in doing this. Yeah. Okay, guys. Thanks. Let's start the day. Anything else you want to discuss? Anything from Hyderabad? Anything from Hubli? No, yes. Okay, yeah. Yeah, thank you. Good day.
Thank you, sir.